Boom. All right, what's up, you guys? It's Royce Jacob. Welcome back to the channel. In this video, I want to talk to you about why I believe now is a great time to be loading up on some of your favorite growth stocks, and also where I'm personally seeing opportunities in this current market environment. All right, so as you all know, the past couple of months have been absolutely terrible for some of our favorite sectors across the markets, but I'm feeling a comeback in the cards, and of course I want to explain to you guys why that is. All right, so let's quickly go over a few of the tabs that I want to share with you, and then we'll dive into each one individually. In front of us is a chart that I have shared before, but it's important for this topic, so I want to share it again. This chart is called the Wilshire family, and what this chart is and why it's important for this video is because it shows how small caps have been performing relative to large caps, and ultimately shows how historically undersold these small caps are to large caps. And of course, small caps are directly correlated with these growth sectors that we are going to be talking about, okay? So we will visit this chart when necessary as we talk through the fundamentals and technicals, because this combines both fundamentals and technicals in a sense. We'll revisit this chart over the course of the video when I feel it's necessary, all right? But to kick off the video, I do want to read over the intro to this morning's newsletter that I sent out, because it sums up all of my thoughts on the current macroeconomic environment in just a more refined way, so I'm not just trying to wing it, all right? So I'll kick off the video reading through this. Again, I will expand on certain thoughts in this intro and in this writing that I made this morning when I feel necessary, and we will likely revisit this chart again as we move through this. And then of course we have a few charts to look through today. I will include all of the ticker symbols that we are covering in the title, but to kick it off on the charts, we're going to kick it off with the triple Qs, hit the NASDAQ, because the NASDAQ is so tech weighted, and ultimately the price action of the NASDAQ is going to be the most closely correlated to some of these growth sectors and growth markets that we're going to be talking about, okay? Even cryptos do follow the NASDAQ to an extent, okay, or are correlated to the NASDAQ, which means that they do similar things in terms of price action, okay? And again, we'll kick it off with the NASDAQ, but I will include every ticker symbol that we're covering today in the title of the video in the order that we'll be covering them, all right? So we will close it out on the charts. This last tab I want to share with you is something that I'll talk about once we come around to it. This will make sense, but this is very cool, and this is a very good sign for the first stock that we're going to be talking about. Many of you know what it is, but this is, again, just to complement the technical analysis on that first stock we're going to be talking about. So let's read through this bad boy. As always, though, you guys, please give the video a like if you go on to gain value from it. If you guys are excited about growth stocks right now, if you guys have been bagging up over the course of the corrections that we've been seeing over the past few weeks, give the video a like. Got diamond hands up, respect that. Let me know in the comments down below what your favorite growth stock is at this moment in time. And if you're not subscribed to the channel, what are you doing? Subscribe to the channel. It means a lot, you guys, okay? So again, let's read through this bad boy, establish some of the fundamentals, and then we'll dive into some of the charts that I want to talk to you guys about today, okay? Or at least go a little more in depth on these guys. Happy Tuesday! We're finally seeing some green, and it feels great. Tech stocks, growth sectors, and cryptocurrencies are bouncing big today following multiple sessions of downside. The strong hands and dip buyers are finally beginning to step in with the numbers required to keep things floating, keep things green. Let's hope that what we're seeing today are the early signs of a comeback and not simply a bounce preceded by further downside. You guys know I'm an optimist, so I'm feeling confident. As we've been saying for days, weeks now, there's been a lot of fear floating around in the markets. Every day of red that we see amongst growth sectors is another day of weathered longs and tired investors getting squeezed out of the markets. And again, you guys, because of the current retail environment, or the retail environment that was established over the course of the pandemic, so much new capital, so much fresh faces in the market, who unfortunately, a lot of them did get in at higher levels this time last year, have gotten completely shaken out at this point, okay? So there's simply less capital in the markets right now, all right? This can only persist for so long, and I'm happy to say that I believe the worst of it is likely over, although it's still unclear exactly how aggressively the Federal Reserve will attack rampant inflation by tapering bond purchasing and raising rates. It would be surprising to me if the worst case scenario hasn't already been priced in by now. So right now, you guys, we did cover some more specifics around these rate hikes in yesterday's video, but JP just came out today, Uncle Jerome just came out today, and obviously the market was happy with what we had to say, because I think a lot of people were expecting maybe like four hikes this year, okay? And just to sum it up, you guys, not going to get super into the specifics of rate hikes and asset tapering or asset purchase, just slowing down asset purchases and whatnot. But pretty much, if we see 3 or less rate hikes this year, I'll just sum this up. I think growth markets are going to do very well. I think the S&P, NASDAQ, Dow will all close the year in the green. But if we happen to see 4 or more, then I think that's bad news, because ultimately, again, these raising rates do create strength for the US dollar and weakens everything that trades against it, which is pretty much everything, okay? So 3 rates or less, the markets are green. 4 rates or more, the markets are red. That's not only my opinion, that's the opinion of many people I respect. So we'll just call that there. But again, you guys, the macroeconomics at this point in time, the actions of the Fed ultimately will very, 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 very heavily dictate the price action moving forward, not only in growth sectors, but across the entirety of the market. So just be aware of that. But personally, I'm feeling optimistic that, again, especially after seeing what Jerome Powell had to say today, specifically in just kind of the overall view the Fed has going forward in 2022, I'm feeling optimistic that the worst case scenarios at this point have been priced in, especially in growth sectors, especially as we can see as we zoom in here, which we'll talk about right here. So below is a chart. It's the exact same chart, but I just turned it to night mode. Is that I featured in Friday's video again, showing the current disparity between small caps and large caps from a historical perspective. It's been a very, very long time since small caps have been at this much of a discount. Okay, so let's take a look at this guy. Actually, I just have a couple more sentences here. Again, anyone who would have been shaken out of growth stocks that have gotten crushed over the past month or so likely has been shaken out by now. I think the growth sectors are due for an exciting game of catch-up. Again, we'll dive into this chart right now, and I'm further preparing for it. So again, if you guys have been bagging up, if you guys have been taking advantage, you've been a shark in these bloody waters, let me know what you've been buying in the comments down below, all right? So again, the Wilshire family. This shows, let's read through these. Large caps, Wilshire 5000, mid caps, micro caps, and small caps. And you guys can see the color correlation right there. You guys can see it, okay? So regardless, we are just looking at the Wilshire small cap and micro cap as well, I guess, which is the red and pink lines, versus the large cap, which is the black at the very top. So pretty much, as you can see here, over the past, I mean, what is this? Since the 80s, we're going all the way back here. Oh, okay, wait, no, let's go 5 years. This is since 2017, okay? You can go back even further, 10 years, 30 years, and see how even more closely correlated things usually are historically up until this past year when everything just went absolutely haywire, absolute black swan. But let's just look at the past 5 years for a little more recent historical reference, okay? But even here, okay, so again, 2017, 2018, you can see how closely correlated all of the small caps are with the mid caps and large caps, okay? So let's just go to the past year alone, though, and cover what has happened over the past year. So this pink line, this whatever salmon line, is micro caps, and then the black line that you can see kind of just floating around in here is the large caps. So this time last year, again, February, March of last year, when growth sectors, rat blockchain, EVs, green energy, Bitcoin miners were absolutely ripping, you can see that the micro caps and these small caps were obviously doing extremely well. Rat blockchain, a lot of green energy plays are considered to be micro caps. Okay, so keep that in mind, and that's what's falling into the salmon category. But since then, since we have gotten news of again the Fed stopping this helicopter money, just inflation rising, and the investors understanding the fact that the Fed has had to take action, and likely their hand would be forced going into 2022, which again is why I'm assuming that the worst case scenario for the Fed's actions have been priced in at this point. Just over the course of all of that market psychology and a lot of other factors that you guys know that we've covered over the past couple of months, regardless, over that span of time, we have really flipped the script, okay? And you can see that where we're at now, the salmon line is at the bottom and the black line is at the top. Therefore, the micro caps are underperforming or doing significantly worse than the large caps and the value stocks than this time last year, okay? So, do I think we'll get to these levels? Absolutely not. I do think that was inflated. I do think that the valuations that we were seeing across the markets are hard to justify even in a great operational scenario. So again, you guys, the markets ultimately are a futures market. They're betting on the future. And we have seen when risk leaves the table, when there is fear in the air, which there has evidently been, tax loss harvesting in as we closed out the year of 2021, fear was in the air. Again, there was a lot of factors that were causing investors to sell. That's when large institutions, large capital allocators flee to value stocks and these large cap stocks as opposed to the small cap stocks, which have been getting absolutely slaughtered, okay? Large caps, just think Apple, Amazon, the FANG stocks, and you can see how, again, just look at your favorite growth stock, look at Riot Blockchain versus Apple over the past few months, and that's a perfect kind of relative to the Waves fam example of what's been happening, okay? Regardless, from a historical perspective, small caps are oversold, historically oversold. They're at a historical disparity, not historical disparity, but the greatest disparity than they had that. The biggest disparity, which means like they're the furthest away from each other than they have been in many, many moons, many years. And I do think that there is some catch up to be played, and there is some reversion to the means that needs to happen within growth sectors. Again, do I think we're going to get to these levels? Do I think we're going to see kind of bubble behavior like I did in 2020? I don't, because that was kind of the perfect, or 2021, again, a year ago. I do not, and I don't think that's healthy. I think that was a very, there were a lot of stars aligning at that time. Again, the retail investor space, just the excitement, the cash flowing, the helicopter money flying in from the Fed. There were a lot of factors, there were a lot of stars aligning for these micro caps to see the price action that they did. Therefore, I don't want to see it happen again. I don't think it will. I don't think it's healthy, but I do think some catch up is in order, and I do think that these two can reach kind of that middle ground once again, okay? Because again, growth sectors have just gotten so absolutely destroyed since, when is this, move my fat head, since I mean pretty much November of this month, okay? October, November, everything was doing pretty good. We're all evened out, but over the past 2 months, again, things have just gotten absolutely smoked, okay? So that is that. We don't really need to revisit that again. We just covered this bad boy. Also, you guys, if you do want one of these newsletters in your email inbox every single morning, this is only part one of part two. Part two, I include charts of like real-time charts during trading hours, okay, and talk to you guys about why I'm making the trades I'm making, obviously along with the complete breakdown of my entire personal portfolio, all of my call options, exact call options I have, when I'm buying more calls, when I'm buying more stocks, my entire stock position, my entire crypto position. This morning was a pretty busy morning, and again, I'm excited and I'm prepared. I'm preparing in the process of just battening down my portfolio for what I believe will be a comeback. So if you guys want to know exactly, again, all that good stuff, and you get the Sunday Stock Watch, the exclusive Sunday Stock Watch videos as well. $15 a month, $40 for every 3 months. I really do my best to make that worth your hard-earned money. So it means a lot if you guys check that out. That's going to be the first link down in the description box below. So again, appreciate it if not, but if not, appreciate it if you do check it out. But if not, as always, no worries. I do appreciate you guys watching right now. Okay, so that's that, you guys. That's pretty much the gist of the fundamentals I want to talk about. We did talk about the macroeconomics. Again, the actions of the Fed will heavily dictate the overall price action of not only growth sectors, but the greater market environment. So just stay on your toes, guys. Keep your finger on the pulse of what the Fed is doing and what their words are, which I do cover again in the newsletters as well. But for the most part, as I've been saying over the course of this video, I think the worst case scenario, so first of all, I don't think the Fed will take that route. I don't think they're going to execute on the worst case scenario or the most bearish scenario for the markets, which would mean like 4 to 5 rate hikes this year. But even if they do, I think for the most part, that's priced into growth sectors. Okay, so let's talk some technicals. Let's kick it off with the triple Qs, the NASDAQ. Zoomed out, the NASDAQ is in a very, very obvious ascending channel. This is a very clean ascending channel, which just yesterday, so I'll say this ascending channel has been spanning from the 1st of September, so almost of 2020. So for almost a year and a half now, very evident ascending channel. Again, a lot of touch points on the top line of resistance and bottom line of support. That line of support, which we did just test, we actually broke below yesterday. Scared a bunch of people, but what I do really like to see here is that we did not close the daily candle below that, but actually right on top of it. So a little bear trap right here, a little fake out. We did close the day above that, and we really rebounded big time in today, which is Tuesday, January 11th, if you guys are watching this at a later date, okay? But regardless, over the coming week or two, I do think the NASDAQ will begin to make its way up to test resistance on this short-term downtrend. And at the very least, daily Stokes just curled to the upside, which is a very good sign for medium-term price action. And again, risk appetite is coming back to the markets. I do think that what we've seen today is the beginning of, at the very least, a medium-term reversal. Now, do we head back to all-time highs? We'll cross those bridges when we come to them. But in the short to medium term, I do think the NASDAQ will make its way up to test the line of resistance since its all-time high here back in mid-November. Touch point here, creating the line of resistance on the shorter-term downtrend. Take us back up to $400 over the next 2 weeks. And if we can break through that, I think it'll be a pretty quick jump to test the line of resistance on this overall ascending channel, okay? But we will see, we will cross those bridges when we come to them, and just stay aware, you guys. But as far as the short to medium term is concerned, I am feeling very bullish about technology, again, EVs, all these growth markets and growth sectors, cryptocurrencies, all the good stuff that we love so much here around the channel, okay? So that's triple Qs. Let's kick it off. Let's move on to, not kick it off, but in terms of the stocks, in terms of plays I'm excited about, let's kick it off with VUZI, okay? So we'll talk VUZI, Coin, SoFi, RIOT Blockchain, Marathon Digital. Okay, boom, there we go. Okay, so VUZI, and I'm sure a lot of you guys expected this, but VUZI is what I want to talk to you guys about what I wanted to cover this article for, and not even cover this article, but just talk to you guys about what's going on here. So this just resurfaced as well. This was actually a Wall Street Journal from a month ago. Apple's iPhone successor comes into focus. An augmented reality headset or smart glasses could become tech giants' next big thing. Okay, so obviously, Apple, these are freaking sick. Apple, the largest company in the world at over a $3 trillion market cap. I'm not sure if as of today it's still over $3 trillion, but first company in history to reach over $3 trillion by market cap, okay? And I do think that VUZI will greatly benefit from the attention around this, okay? Again, this could be the next iPhone, and I really do think it is. This is if you're just, again, as a trend spotter, this is the obvious next iteration of the iPhone. Again, it's just more efficient, it's more convenient, and ultimately that's what the human race aims for, and that's what evolution is, okay? It's a race towards efficiency and optimal efficiency overall, okay? And although Apple is probably going to excel way more than VUZI at this, VUZI is still, VUZI at this point in time is the OG in the space, okay? This is the first company at its scale to be working on these glasses. And if you watch the video where I covered that I posted a week or so ago, talking about my number one stock pick of 2022, it's VUZI for this reason. Again, Apple is going to shine a lot of light on this subsector of the markets, on these augmented reality glasses, which VUZI is the leader in. Okay, it's the leader in this race at the moment. Go watch that video again. They came out. They have a Verizon partnership, which is huge. They just delivered $400,000 in glasses to a Fortune 50 company, and it's just the beginning for you guys. And considering they currently have just over a $500 million valuation, this is a micro cap stock. I think there's so much freaking upside potential for this play. And I also think it's very possible that they could get acquired by Verizon or Apple, if I'm being honest, okay? They have so many patents in the space. And $500 million to a $2 to $3 trillion company is literally, as crazy as it is to say, is just literally not noticeable, okay? So acquisition, very possible. And again, just the space, just what it does, I think will be a very exciting subsector of the tech markets as more comes out about Apple's eyewear. Okay, so again, just a fun thought experiment just to get you guys excited about this, because I'm very personally, again, still very excited about VUZI, very excited about the potential here. Let's talk about price action. So obviously VUZI, along with so many other sectors since mid-November, have gotten absolutely crushed, absolutely unrightfully so. Again, especially considering so much good news and good fundamentals have been coming out surrounding these stocks. I think at the very least, VUZI will see a bounce to test the long-term line of resistance on this overall downtrend right here. You can see, boom, right there, boom, all-time high, back above $32, which is crazy. Again, this time last year when microcaps were excelling. I do think that at the very least, touch point here, long-term line of resistance. I do think VUZI will take a jump up here. And by January 25th, 2 weeks from today, that would take us to over $11, okay? So as always, you guys, the same goes for all of these. Go into your trading view charts for yourself, draw your trend lines, and just get excited about what could be to come. Because again, I think, again, you got always just my opinion, but the majority of the bloodshed seems to be over. Anyone who would have sold it by now has sold, and now I think it is time for this comeback, for this short to medium term bounce once again. So excited about VUZI, still my number one pick if I could only hold one stock for 2022. Personally, it would be Vuzix for all the reasons we've been talking about for the past couple of weeks. But Coinbase looking pretty good now too, closing the day up 5.5%. Sorry. So Coinbase, At the very least, I do think we will see a bounce up here to test the line of resistance on this very obvious downtrend that kicked off from Coinbase's local high at 370 back in early November. Touch point, every trader trading Coinbase is looking at this, and I do think that over the coming sessions, January 13th, a couple days from now, we could see $250 again. But things will get exciting if Coinbase is able to break this, and this is where it's especially important for you guys to go in and draw these lines. If Coinbase can break this line of resistance, then I do think we are in for a pretty exciting move to the upside. And then if it can clear this previous high that it's set, this previous lower high that it's set on the series of lower highs and lower lows around 280, say just $285. If Coinbase can break 285, then I think things get very exciting. Okay. So it's Coinbase. SoFi, we'll keep these pretty quick, short into the sweep, because ultimately the fundamentals are what matters most here. SoFi, boom, we can draw the line of resistance here. I did this, but unfortunately didn't sync. SoFi is coming up very close on this line of resistance, similar to many other plays in the growth markets. Daily stochastic RSIs. Good old blue is crossing over red. That is a bullish sign from, once again, a medium-term time horizon. And I do think we will be able to break this. I think SoFi is a very obvious chart. Just anyone with mediocre trend spotting activities, anyone with eyes pretty much, can see that it seems more likely than not, right, that we start making our way back to the top side of this very obvious range. This is about as textbook of a W pattern, long-term W pattern as it gets. And I do think SoFi can make its way up to at least $20 on this medium-term reversal. Okay, so we'll be excited. We'll be very excited to see SoFi break this line of resistance right here. And again, I don't know how long it's going to take. We have to see what happens in the macro, but I do think ultimately SoFi can see $20. I'm not even going to put a date on that, but stay tuned, you guys. Been talking about SoFi. SoFi is actually a fairly new face to the portfolio, so I'm excited to cover SoFi more in the newsletter as well too. So that's SoFi. Not going to cover Hood, but let's take a look at RIOT and MAR to close out the video, all right? The good old ones. We'll throw out a bonus Bitfarms at the end, too, just for you guys, okay? Actually, I haven't even looked at Bitfarms in a while. But RIOT, I do think we'll see, at the very least, a bounce up to test this line of resistance. Just a lot of resistance on these medium-term downtrends, right? You guys, since mid-November, creating lines of resistance on these bounces. Boom, boom. Line of resistance here would take us January 19th, just over a week out from today, would take us to $25, which is considering we're at $20, that's a potential 25% of upside, okay? So, same story, different chart, you guys. If we can break this line of resistance, that will get me excited. But short term, I do think we can at least bounce up to $25 over the coming week or so. Mara, in the case, of course, for Bitcoin miners, that Bitcoin does well. That's obviously super important. So, Mara is looking a little more bullish. Mara actually has broken and finally closed a daily above the line of resistance since its high, its recent high back in mid-November. It's actually its all-time high because Mara was actually crushing it, okay? So Mara, though, is currently trading in this range, has reclaimed this range right here, which is a pretty strong historical range for Mara over the past years. So I do think Mara, if I'm being honest, best case scenario for Mara, even if Bitcoin does do decently, because Mara has just so significantly outperformed the rest of the Bitcoin mining sector, I think Mara can slowly but surely make it to the top side of this range. Get a quick price range right here. So from where we're at, around $30, $29.50, that could be 50% up if we do come up here to test the top side of this range, which again historically has acted as a ceiling for Mara in the past. So that'll take us up to almost $45 in Mara. Again, this is in the case that Bitcoin performs well, but I do think now that we have reclaimed this range once again and broken resistance, Mara is looking pretty good from a trading perspective, okay? Bitfarms right here, again, it's been a long time since I covered I don't even know what the heck even are these lines right here. So Bitfarms, that's why I probably shouldn't have even done this, you guys, but Bitfarms is in a very, also in a downtrend, but on the verge of breaking resistance. I will call this fair, we can call it like right, man, that's close, you guys. So I will say we pretty much perfectly came up to test, almost perfectly came up to test this line of resistance on the pop today. Bitfarms, if it can see another day of green, if it sees another 10% of upside from here, that would constitute a short-term breakout, and the daily Stokes also curling to the upside. Bitfarms, from a fundamental perspective, is a great play. That's why I still, to this day, hold a decent, not a lot of Bitfarms by any means, but I do hold a Bitfarm position personally, just because I have fundamental conviction in this company, and the day-to-day price action doesn't really faze me, especially with my position sizing. So Bitfarms, again, still believe in this company long term. If you believe in Bitcoin, you believe in Bitcoin miners, and if you believe in any of the names we talked about today from a fundamental perspective, the levels we're at now, just my opinion, are extremely, extremely appealing if you have capital to deploy, okay? And as always, you guys, never drop more than you can afford to lose. It's very, very unlikely, but again, curveballs are thrown, and it's just better safe than sorry sometimes, okay? So be safe out there, you guys. Again, keep your finger on the pulse of the macro, and let me know in the comments down below which of the plays we talked about today you're most excited about, or if it's a completely different play, what is it and why? Because I might pick some up. All right, so I'll see you guys downstairs in the comments. Until next time, always remember, take action, make waves. Peace.